Good morning, traders. Richard here doing a quick Ichimoku Cloud Chart market update on the Nasdaq 100 E-minis futures contract. What a strong rebound rally we've had yesterday when Trump put a bit of a hold on the tariffs. Now, just to put things in perspective, the last update we were around about in and around these downside targets, because when we had this sell-off we were looking at these downside targets, this August and April lows. We eventually got there. Then we were fighting for support at the top end of the cloud and did highlight if support fails, there's downside risk to the bottom in the cloud. We did get a support failure, very volatile, as you can see the lengths of the wicks there. And then we hit this bottom end Fibonacci 61.8% Fibonacci retracement of this entire huge rally we've had the last year or two. And then we had a very strong rebound from this cluster of support between the bottom end of the cloud chart support level, yeah, you can see there, and the Fibonacci support zone. So then we got a very strong rebound to the upside. Let me just make this chart a little bit bigger. A couple of days of retesting that for support. Strong rebound rally, broke through the standard line of the cloud and the turning line of the cloud there, and now we're very close to the upside resistance zone at the top end of the front end of the cloud. So this is a new resistance zone to keep an eye on, as well as the 377 exponential moving average. That's the next upside resistance target in this rally. So this is overall a quick relief rally in a bear market that we've got, since price action below the cloud is bearish. We've also completed this downward continuation pattern, move, retracement, move down. Now we have a retracement, so the third leg down can still be another 15% drop or so since we're below the cloud. Now watch out for the interaction. Are we going to retest this 18654 for support now, and then maybe a weakness up to 18252? Can see a technical retracement of this move at 23.8 or 38% Fibonacci retracement to these levels would be okay, and then a continuation of that move. Let's take a look at the hourly 4-hour one to see what's the scenario there. There we go. You can see how the 4-hour upside resistance targets holding for now, because when we had these rebounds from this cluster of cloud chart support levels here, the upside target, the first resistance levels were the standard line of the cloud here, the bottom end of the front end of the cloud, and then the turning line of the cloud as well. We sliced right through that, and now we battled then the Nasdaq futures rebound rally ran into trouble at the bottom end of the cloud. To be truly bullish on an Ichimoku cloud, we need to trade back above the top end of the cloud here. So watch out for any kind of pullback to these levels here, the turning line and standard line of the Ichimoku cloud, and then a breakout past that cloud chart resistance. So that's kind of what we want on the 4-hour, a breakout past that cloud chart resistance, and then we have a bullish 4-hour Ichimoku cloud. But until then, there's still significant downside risk in this market to retest this cluster of cloud chart support levels to the downside on the 4-hour. And if you look back at the daily, you got to keep an eye on these the turning line and the standard line of the cloud to come back as key support zones. Let's take a look at the weekly Ichimoku. So far so good. We did manage to rebound from this cluster of support at the top end of the Ichimoku cloud, so that gave us a bit more confidence in taking this trade. Very difficult to take these swing trades because you are trading counter trend. The price action is below the cloud, bottom in the cloud, so that's bearish on the weekly. We also had a nice rebound from this moving average. That's the 233 exponential Fibonacci moving average there. So nice strong rebound from the zone. Now the thing is, we ran all the way back up. These old support zones that were supposed to be new resistance zones did not hold, so very strong performance, and we're back above the bottom in the cloud. That's critical for the market to stay above this bottom in cloud chart zone. If support fails here, then we're back in bearish territory, but to be truly very strongly bullish, we need to be back above the top end of the weekly cloud. So this is an encouraging sign to see that we're back above the bottom end of the Ichimoku cloud, so keep an eye on to see if that cloud chart support zone is going to hold. If it holds, then we should see a nice move up to the turning line there of the cloud, and then the next side to the resistance will be the top end of the Ichimoku cloud, as well as the bottom end of the front end of the cloud. So these are the upside resistance targets. First, it would be the turning line of the Ichimoku cloud, the top end of the Ichimoku cloud there, and then the bottom end of the front end of the cloud. These are the upside targets, provided support holds at these levels. If we dip back below here, then this rallies back into trouble, because price action below the Ichimoku cloud is ultimately bearish. But back to the daily, so far so good. Nice little rebound rally. It was quite a difficult trade to take because the news was incredibly negative here, but in the day you just got to focus on your cloud chart trading strategy, focus on the rules, where they normally rebound, key support levels, key resistance levels, and we swing trade those positions as they unfold. Now watch out for consolidation back down to the turning line and the standard line of the Ichimoku cloud there. These two are that's the turning line and that's the standard line of the Ichimoku cloud. But slower moving one, a much faster moving one, but that should be the new support zones. After a technical retracement of this move, we should expect it to pull back to the bottom end and the front end of the cloud. Until next time, happy cloud chart trading. Bye for now.